Hello everyone, my name is Seeba and I would like to thank everyone for watching our video here in CurrencyHacked.com. In this video I'm going to talk about what to expect by reading a book Intelligent Investor, which was written by the Benjamin Graham. If you don't know about the Benjamin Graham is the most respected person in the investment field. He have written like lots of book, but we've been telling our reader and the everyone to look the book or maybe study the book Intelligent Investor and the Security Analysis, because Intelligent Investor is the book which will tell you about the definitive explanation of the value investing, and the Security Analysis book will help you to find the good bond and the stock or other investment way to make a better decision and to get a good return on your investment. So let's move forward. Let's go to the next slide over here. And before I talk more about the book and everything, if you want to contact us, you can always send a email at info@currencyhacked.com, and if you want to contact me personally, my email is seeba@currencyhacked.com. You can see me in the right hand side in the bottom, and my email address as well. So before I move forward, one thing you have to acknowledge, I think everyone need to acknowledge that the investment has a risk. They have to understand the risks, and if you want to, we are not like waiting your personal situation, so make sure that you talk with the financial advisor before you make any decision. I would like to read one paragraph over here. Never invest money that you can't afford to lose. Always do your own research before investing in cryptocurrency and other kinds of share. Cryptocurrency are subjected to high risks and have high volatility, obviously. Cryptocurrency such as Bitcoin, Ethereum and some other cryptocurrency is their volatility is very high. Sometimes they might went up 20-30%, and sometimes they might go down by 20-30% or maybe sometimes 40 or 50%. So let's move to the another slide over here. Let me we can understand the first paragraph of the Intelligent Investor, what he's trying to tell us and what he's trying to give in his book Intelligent Investor. Let me read the first paragraph. This is the only first paragraph which was taken from the Intelligent Investor book. The purpose of this book is to supply in a form suitable for layman guidance in the adoption and execution of an investment policy. Comparatively little will be shared here about the techniques of analyzing securities. Attention will be paid chiefly to investment principle and investor attitude. We shall, however, provide a number of contents comparison of a specific securities, chiefly in pairs appearing side by side in New York Stock Exchange, in order to bring home in concrete fashion the important element involved in a specific choice of common stock. First paragraph from the Intelligent Investor by Benjamin Graham. In his first paragraph, we can clearly see that he is trying to give us a policy and the policy which has a better chance of the good return in the investment, plus attitude about the investor, and obviously he's going to talk about the investment versus speculation, because of the fact that most of the people don't know whether they are speculating and investing. So it's really important that whoever want to jump into the investment field, they have to understand the difference between the speculation and the investment. So that's it for this slide. Let me move to the another slides over here. Let me read one line from the book that I have written in this slide. Investors' chief problem, and maybe even his worst enemy is likely to be himself. The fault, dear investor, is not in our stock but in ourselves. And this line is very we like this line because the investor chief problem, main problem is himself. Because he don't able to control his temptation, and the more the price of the stock went up, he buy a more, and then he think that it will continues for forever. And one things let me tell you over here is that there must be some limitation in either in upward and downward. So when it's go to its limit, it will go to the opposite direction. And whoever buy in the peak price, then they like, let's say if someone think if someone buy the stock in the price, in high price, and it's going up and then he's keep buying because he think that he will be selling in the high price. But when the stock price will go its limit, it will turn negative. It means it will go to the opposite. And when it's went down, same person who was buying the stock in the high price, he is going to sell it because he will think that he will be selling the stock in the low price. This is the character of the stock, we know that. And then one thing we know that the stock sometime it will be undervalued because of the human nature, human temptation, and it can be of course the overvalued sometime. So that the true investor, we believe, let's say the smart investor, we believe that the investor who can buy in the the bargain price, which like the bargain price should be found by the fact such as the income statement, balance sheet, and the obviously the cash flow statement. I'm not going to talk more about it over here, but there must be a plausible ground to find the say intrinsic value of the stock. And then we believe that we think that the investor is not wrong even if he buy in the bargain price, because we believe that the stock will go into its real value in the long run. So let me move to the next slide over here, and I would like to read it loud over here as well. This this paragraph is the important to read because it's really important to understand. As I've already talked about the investment and speculation, let me read this paragraph over here. The adventure beyond this safe and sound territory has been presented as fraught with challenging difficulties, especially in the area of temperament. Before attempting such a venture, the investor should feel sure of himself and his advisor, particularly as to whether they have a clear concept of difference between investment and speculation, and between market price and underlying value. In this paragraph, we can understand that he's trying to tell us regarding the investment and speculation, as we already talked about before, and the between market price and the underlying value. Because we know that the market price sometimes it can be undervalued and overvalued. If you are investing in the stock or in cryptocurrency, we must buy in the undervalued when it is undervalued to take lots of profit from it. And of course they have to understand the investment and the speculation. We have an article in our website about the investment versus speculation. You can always go to our website, and let me move to the other slide here. So that's it for today. If you want to contact us, you can always connect us on LinkedIn. You can follow us on Facebook and Twitter, and of course you can subscribe us on Currency Hack to get the more videos regarding to the investment and the business.